I am told we are all good to go. So, look, as I said, thanks to everyone. Today we're talking about what's on the tip of everyone's tongues at the moment is JobKeeper and how to get access to JobKeeper. So we'll run through that. Some of it will be very high level because there's a number on the call today that were also on last week's call where we went into a lot of detail. We'll try not to do too much of that today, unless we are prompted to, because we do have a few questions. However, we'll jump into the nitty gritty of, all right, what you now need to do to access these benefits, which are quite significant for a number of businesses and a very large number of businesses, particularly those that don't think they're entitled to it. So I will jump into it. I believe we allocated an hour. I would like to have us all wrapped up within 45 minutes, well and truly, particularly so that we can answer any questions that you may have. So let's get started. You will see also on the screen, I believe, my colleague Claude Collicker, who is a senior manager with our firm, has been with us for many years, and is largely responsible for a lot of the work that we're doing with JobKeeper at the moment as well. So welcome on board, Claude. I'll be looking to for your help along the way also. As I said, Claude and I are hosting today. We also have joining us a little bit later, John Correia, who is our finance specialist. And in particular, I've asked him to have a bit of a chat to us about some of the financing options that are available currently, particularly in light of the government push for banks to help business people more and more. So he's going to have a chat to us about real life examples of what he's seeing out there in the finance world, and also give some guidance on what you can do to improve your chances. So I know there's a few people chasing finance at the moment. So we'll jump across to John in a little while. But for the moment, you'll have to make do with Claude and I. So a little bit of housekeeping. I will ask everyone to keep your microphones off, just so that we reduce any feedback. You'll also see the chat function where you can raise any questions as we go through. It may be worth just holding off on asking those because we're hoping we can answer most questions as we go along. But if you do have questions, more than happy to answer them at the end of the presentation, and also offline if necessary. So I will jump into today's agenda, where in particular we're going to start off looking at JobKeeper and eligibility. Some critical updates. These updates are coming through to us now daily. So there's some content which we only just got access to in the last 24 hours, even less. So we'll have a chat about that, and there's some more information that we unfortunately didn't even have time to get into the presentation. So I might see if I can jump across to that as well. So, but we'll have a chat about nominating your employees, actually enrolling for JobKeeper. As I said earlier, finance and borrowing, that's John's specialty. So he'll give us all an update on that. The last few sessions we've run, I've spoken about what the banks are doing and what they're offering, but we thought no better person to talk about it than John. A number of you have already submitted questions, so we've actually responded to a number of those. There were a lot of questions this week, so we can see which topics are of interest to everyone. So we'll run through some of those, and as I said, we'll also answer some other questions that come up, and then we'll have a chat about where we can help you and what you need from us. So I'll jump straight into it. And some of this, if you were on the call last week, will be familiar to you. However, we have expanded in certain areas, and we are focusing on just the priorities at the moment. So you will all know that $130 billion has been allocated to JobKeeper by the government, and it is a significant incentive to get access to. So it is going to generate a hell of a lot of cash flow through business, not just small business either. So to be able to maintain employees, to be able to fund keeping those people employed, and to keep them away from the Centrelink offices and queues is critical to us recovering from this quicker than we would have normally. So $130 billion is a significant sum to be thrown at business. So that's why we're so focused on it. We want our business clients to take the greatest advantage possible in this. The details are that eligible employers will pay their eligible employees at least $1,500 before tax a fortnight. It does, and I'm being specific, very specific with some of the terminology here. Eligible employers will be reimbursed a fixed amount of $1,500 per fortnight. Employers will need to pay eligible employees a minimum of $1,500 per fortnight as well. But this will be paid to the employer in arrears. So some of this will become clear shortly. Payments will commence in the first week of May 2020. And if employers do not continue to pay their employees for each pay period, they will cease to qualify. So if the employers may cease to qualify and the employees may cease to qualify as well. So it's important to make sure you meet all of the criteria. To be eligible as an entity, you must have carried on business as at the 1st of March 2020. You must have also employed at least one eligible person at that same date. Your eligible employees are currently employed by your business for the fortnight you claim for. This is a part that we will get into shortly, where we'll talk about what periods it covers. And importantly as well, your business has faced a 30% fall in turnover. Now, I've put the asterisk next to that because that has slightly changed. Okay, so there's some discretion allowed. But critically important as well is that the 12th of March this year, you must have had an ABN and you must have lodged various documents, either tax returns or BASs. And importantly as well, there is a discretion to give further time after the 12th of March. So employers, and in relation to self-employed people, this is very important. Again, we're getting a lot of questions about what happens if you're self-employed. People who are self-employed will be eligible for the payment, but you still need to meet the eligibility criteria. And importantly, if you are self-employed, you can only get this from one source. You can't double dip on any of these payments. If you're eligible for JobKeeper payment, you can also receive income from other sources though. So if you run your own business, but you're an employee elsewhere and you've had a decline in your business, you should be registering right now. Okay, that's as long as you've had that downturn, as I mentioned. Business owners actively engaged in their business. This again is a very misunderstood area of this legislation. However, it's critically important that we all get across this, because you have what's called eligible business participants. Okay, now they are involved in, for example, companies, trusts, and partnerships. And this might be the situation where you are a director of a company, but you don't take a wage or a director's fee or any form of remuneration as a director. Or even as a shareholder, you may only take dividends out of that company. Or if it's a trust, you may just take a trust distribution. With partnerships, a partnership cannot employ yourself as an employee. So this is where they broadened it considerably to allow access to these sorts of JobKeeper payments for these type of business owners. And as long as you meet all of the other criteria, you will qualify. So in the same way that your eligible employees will receive $1,500 a fortnight, you yourself or your business partner or your spouse, whoever it may be, is also entitled to $1,500 a fortnight. So very, very important, and we can't be clearer on that about making sure that you do access this. There's a lot of people that we've already spoken to that have said, oh, I don't employ anyone, and therefore I'm not entitled to anything. So I think, Claude, you got an email only yesterday, or you saw an email yesterday that said exactly that.
Yeah, correct, Kelvin, yeah. So basically, as Kelvin said, just because you don't employ people and you operate through a company, trust or partnership, as long as you meet the eligibility criteria, predominantly the reduction in turnover, then yes, you as what they call an eligible business participant, being a beneficiary of a trust or a shareholder or director of a company, can be entitled to the payment, the JobKeeper payment, as a business participant. So yeah, very important to keep that in mind.
Great, thanks, Claude. And as we've said at the bottom there is a limit. This is limited to one entitlement for each entity. So if you have a partnership of two people, even if it's husband and wife or, brother and sister, only one of those participants is entitled. So the ATO is still in a position where at the moment, and we'll talk about it shortly, where we are registering which employees are entitled to it. At the moment, we are just nominating that there is a business participant. So we can chat about that shortly if people are interested. Critically important to this is there must be a decline in your business. So we are still seeing, and despite the doom and gloom that we read about every day and we see on the news, there are still a lot of businesses that are continuing as normal or actually doing more than they were previously. So those businesses won't qualify unless there's other circumstances, extenuating circumstances. However, this is intended for businesses that have suffered a decline, and we all know those businesses that have suffered. Some are extreme to the point of they've gone to, down to 0% of their turnover, but others have just had a general downturn in their business. So the major critical factor in all of this is you must satisfy this decline in turnover test. The important thing with this, however, and this is one part of it that we really like, is you only have to satisfy this test once. So if you qualify, for example, for the month of March, that's it. You tick that box, you're entitled to this payment for the next 6 months, irrespective of where your business goes. Okay, so month might have been an awful month for you, but if April through to September are fantastic months, that's great, because not only are you going to get JobKeeper, but your business will pick up again. And as times change, and as hopefully in the short term we come out of this and things get better and people start moving around town and businesses start operating, if this all goes well, this is a major initiative that will get our economy going again. So again, very important we get access to this, as many people as possible get access as the government allows, so that we can get ourselves back up and running as soon as possible. As we said there, at the time you enrol, you need to confirm your business in a relevant period has had or is likely to have a 30% fall in turnover. And again, we'll talk about that shortly. How to calculate your fall in turnover for the first fortnight starting 30 March. Again, that goes back to the period you start to qualify. To work out your fall in turnover, you compare either GST turnover for March 2020 with the same turnover for March 2019, or your projected turnover for April 2020 with April 19, or your projected turnover for the quarter starting April 2020. So that would be the June 2020 quarter compared with the June quarter 2019. Now, March is almost a fact now. It's almost, been and gone. So that's reasonably easy to assess. However, there are there is a bit of flexibility as to whether you report on a cash or accruals basis. So you need to look at both aspects of that. But when it comes to projected turnover, and again, if it's just for April, we're almost done with April. So we're saying to most people, you need to look long and hard at what you're doing in April, and in particular the June quarter, but April's right here upon us now, to make sure you qualify. As we said a minute ago, once you qualify, that's it. You've met the test, you go forward and you're entitled, as long as everything else remains the same. How you choose to project your fall in turnover is not dependent on whether you report a quarterly or monthly BAS, though you can if that is easier. Okay, so what we're doing, we're going to give everyone copies of this presentation after the session, as well as a recording. So I will skip over some of this, but if you want detail, go back to things. If you work out that you qualify for JobKeeper payments for the first fortnight, you remain eligible and do not need to keep testing. As we said earlier, again, we keep stressing this with people because there's a bit of misinformation out there that you need to keep reapplying every month, month in, month out. There is monthly reporting, but it's not about your eligibility as an employer. It's about which employees you have. Okay, as we say here, you will have ongoing monthly reporting requirements. Now, in the last 24 hours, as I mentioned earlier, the ATO have released a JobKeeper alternative JobKeeper alternative tests, it should be, because although they're calling it a test, this is where they're broadening it. For example, where you have a business that wasn't operating in March last year or April last year, or that's been restructured, or it's been impacted by, drought, fire, anything else that may have happened. So they have only just released this, and at the moment, all we have is an explanatory statement telling us how it will be applied. We haven't seen the black letter law yet. So, we are going on just what's been announced to date. However, they are saying that the alternative tests will only apply in 7 circumstances. Now, I'm not going to run through these in detail, but as I said, you will get these. Okay, so I'll just slowly scroll through them if you'd like to read them. But if you want to go back to it, you can do later on. Okay, but it is mostly to do with situations where you do not have a comparable period to go back to. So you may have bought your business in the last 12 months. You may have started it, as I said, it might have suffered some other issue last year that prevented you being able to have a relevant comparison. Okay, so importantly, the other information we've got is the commissioner. These tests are applied where the commissioner cannot determine an alternative decline in turnover testing, or as a result of not being able to determine this. And it's where there's events outside your circumstances, internal or external. So again, this is very new, very recent legislation that's coming out. It's not legislation yet. Now, what I have got here, sole trader or a small partnership where the sole trader or one of the partners did not work for all or part of the relevant period. Again, that's what I was referring to earlier about if there was some issue outside your control. So the alternative tests are very new. Keep your eye out for it. Talk to us about it. Or if you're really interested and can't sleep at night, jump onto the ATO website and even Treasury, and there's some explanations. However, if you are interested in looking at those sorts of things, just have a chat to us. Pushing on in relation to the overall eligibility, to be eligible for JobKeeper, one part of the puzzle is being an eligible employer. The other part is having a decline in your business. And the third critical part is having eligible employees. Now, again, we went into a lot of detail last week about who was eligible. But what we want to do today is get into some of the detail of how we go about this. So again, I'm going to go through this reasonably quickly. But the important thing is an eligible employee is someone that was employed by you at the 1st of March, either on a full-time or part-time basis, or they have been a casual but employed for at least 12 months. And they refer to it being on a systematic basis. So we can sort of read a few things into that, but the overriding principle with all of this is it needs to be a genuine employee. You can't have had someone that occasionally worked for you over the year, but all of a sudden you've brought them back on. And particularly if it's family, or as we call a non-arm's length relationship, we need to be very wary. Okay, they need to be 16 years of age as well. As I said earlier, this is the intent. The intention of this is to keep people away from Centrelink. So it's enabling employers to maintain their employees, firstly, so that these employees can have an earning and don't need to go to Centrelink. But secondly, and more importantly, and again, this is where I'm looking and we are particularly looking with our clients, is so that when the good times come back, people and businesses are ready to open the doors and start operating again, which will be important for everyone. So the government want employers to maintain their employee base. Okay, they must be Australian residents. They must have the appropriate visas. They cannot be in receipt of certain government payments. And critically important, and this slips under the guard, they must agree to be nominated by you. And there's, again, tax office, there's a process for this. Employees who are stood down or on long-term leave, they must be picked up and, if you like, re-engaged or re-employed, and they must be paid. Okay, a very important part is the payment of these people. Employees who have been terminated can be re-engaged as well. All right, okay, so we put an example in here of Peter, who runs a retail business. And again, she had the reduction in turnover, but she decides she wants to receive it. She needs to confirm that John wishes to participate and obtain the completed form. Peter pays him at least $1,500 so that she can claim the JobKeeper payment. We have a number of examples in relation to JobKeeper. Okay, so we're happy to share those with you. Or if we're working with you, we will look at your individual specific circumstances to understand exactly how you operate and whether you're eligible. Nominating employees, the only way you get this is to get a nomination form out to your employee and have it returned to you. The forms, the link is in here, so you will see that this links to the ATO website, which allows you to download the form. You can complete it electronically as an employer, but you must issue it to your employee. They must get it back to you, and you must maintain it. And you must maintain it for 5 years as well. Okay, as I said, you don't need to give it to the ATO, but you must keep a copy of the completed form. If you meet the eligibility criteria and want to start claiming JobKeeper, you need to start paying them at least $1,500 per fortnight. And you must continue to pay them for as long as you keep claiming. This, again, is vitally important. There's some people out there that think, oh, well, they've got an employee on the books, in inverted commas, but they haven't paid them anything. And they, as they see it, they will wait till the government gives them money and then they will pay their employees. It will not work that way. You cannot qualify unless you physically make the payment to these employees. And going forward into May, you must pay them on that fortnightly basis in order to be reimbursed by the government in the following month. In the month of April, because this is such new legislation, you have been allowed a bit of time to make catch-up payments. However, that bit of time expires in 1 week. Less than a week, 30th of March. You must have paid all these people $1,500 per fortnight to then be eligible. And what a lot of people forget or overlook is that when you make a payment to an employee, in 99% of cases, that payment is reported directly to the tax office via single touch payroll, which is the electronic reporting system that was put in place over the last 12 months. So again, if people try to defraud the system or rort it, as the ATO are calling it, they will be caught out very quickly, because unless you make a physical payment, do a pay run, report it to the tax office, you will not be able to claim it. You might get paid in the short term, but you will pay it back. Okay, we've included the JobKeeper payment enrolment link on there. However, enrolment is only one piece of the puzzle. Okay, so I will try and, if time permits, I'll try and chat about that shortly, about the various steps we need to go through. After you enroll, you need to identify your eligible employees as well. This is a big part of it. We've underlined this again to stress that your entity needs to enrol by the end of April for payments in either of the fortnights starting 30 March or 13th of April. Okay, so if you haven't enrolled by that date, if you haven't made your payments, you will not get JobKeeper for April. You may get it for May, June, July, August, but you won't get it for that month. Okay, so enrolment did open on Monday, just gone. In fact, it opened up late on Sunday. However, most people jumped on Monday and started enrolling. So once you've enrolled, you then need to send your nomination forms. to all your employees. And as we said earlier, you must have done it by the 30th of April to claim for April. And you can step through the ATO self-assessment process as well for registration, which, typical of all ATO processes, is not as straightforward as it sounds, but we put it in there so that if people want to go down that path, they can do. And as I said earlier, you must reconfirm eligibility monthly. Okay, so critically important in all of this is the eligibility process. So as an employer, as a business, and are your employees eligible? Okay, and overarching all of this is, have you suffered a decline in your turnover, or are you about to suffer a decline? Okay, so very, very quickly, I have included a couple of examples of what would happen under certain circumstances. And this is where we've said, for example, a sample company with 15 employees. This is really what they stand to get per fortnight for those employees. And this program runs for 13 fortnights. So the total amount that they will get from the federal government is $292,500. In addition to that, if they are an eligible business participant, as we said earlier, are they a partner in a partnership, or a trustee, or a beneficiary of a trust, or a director or a shareholder in a company that's not also an employee, they also get this funding. Okay, there's a slight difference with that. That doesn't actually need to be paid out to the business participant, whereas the wages are having to be paid out. So in the case particularly, and we picked one employee one employer client that we've got where we thought he had 15 employees. Turns out he's got 30 employees. So we originally did these numbers for him, and he said, well, hang on, I've got more than 15, I've got 32. So we can double that, and it just shows what he is likely to get. And in the meantime, he's still employing those employees anyway. So it's not as if he was going to put them off. So his business is still operating, albeit suffering a decline. So he will need those employees. So I've said to him very specifically, we need to get this process right for you, because the government are going to cut you a check for almost $600,000 over the next 6 months. So initially he was a bit dismissive of me raising this with him. And I said to him, do you think $600,000 would make a difference to your business over the next 6 months? And there was silence at the end of the phone. I wasn't sure if he collapsed or what had happened. But so this is important. And even if your circumstances are slightly different, again, we put in a couple of samples where you may only have 5 employees, or whether you have 1 employee. You can do the maths yourselves. It's not complex, but you can run through these numbers. We're doing it specifically with clients where we say, okay, we know that you've got 13 employees. So this is the benefit that you stand to make. This is why we need to push ahead with it. Again, come back to this, put your own numbers across these and see how you go. Look, I am going to, and I've got just a little bit of time. So if you will bear with me just for a moment, I just wanted to, where are we? And Claude, sorry, did you want to just chime in on anything before I just quickly jump across?
Yeah, sure, Calvin. I suppose in all of this is that, look, as you can see by those numbers, it is critical that you get this right. Now, this is purely a self-assessment application process. So when you go through the registration on the ATO website, you don't have to provide your proof of reduction of turnover. You don't have to give details of who the employees are. So the registration goes, do you satisfy the reduction in turnover test? Yes or no? So if you go yes, it says, right, how many employees are there for the first fortnight period in April? And you would put 1, 5, 10, 15. And then you'll put, there's another checkbox that says how many employees for the second fortnight of the month. And then it will say, are you registering an eligible business participant, being a beneficiary of a trust or a director of a company? And that's it. and you send through the application, and like I said, it's all self-assessment. So you don't need to provide any evidence of that. However, with employees, the ATO will have easy access to cross-check the number of employees you've registered, because they will have that information via the lodgement of your pay runs every week or fortnight through STP, Single Touch Payroll. So it is critical that you get it right. And also, even more critical is if you just go through the process and just fraudulently put numbers down or say that you are eligible when you're not. I dare say that in 6 months, even 12 months' time, the ATO will start to do audits on all these businesses. And if you're found to have done or accessed this JobKeeper payments fraudulently, or even if it's in error, the ATO have come out and said they will ask you for full payment back. So in the scenario Calvin just mentioned, where there's an employer with 30 employees, and he will receive up to $600,000 in the next 6 months. The ATO will take his word on that. But in 12 months' time, if it's found that he only had 10 eligible employees, they will ask for monies back. So it's very critical that, yes, it is self-assessment, but you need to make sure that you tick all the boxes, qualify, have records of how you've determined your reduction in turnover as a starting point, make sure that all your employees are paid in full correctly to be able to access. And they are generous offers by the government. Like Calvin said, it's all to help keeping businesses in play and just keeping the economy moving until we get back on track and back to normality.
Thanks, Claude. Look, sorry, what I did want to get across to was just the steps that we're moving through with all of our clients that we're working with, just to make sure that we tick all of these boxes and to, deal with the sort of things that Claude just referred to, so that we've got absolute confidence that, yes, you are entitled and you ticked all the boxes and all steps have been taken appropriately. Okay, so again, I had to jump to another document because this is an internal document we're using where we're giving this to clients, where we are working with them, just saying, look, these are the things that we need to do to get right, just to make sure that your butt's covered. Because at the end of the day, we can be doing all these things for you, but the tax man's going to come after you personally as a business person. So if you get it wrong, you will get nailed. And we do not want anyone getting nailed. And we are even told that things like audit insurance won't cover you for these sorts of things if you get it wrong. So you need to get these things right from minute one. And minute one is right now. So as we said, employer eligibility has to be done right this second. So we need to look at your business, the employees, eligible business participants, and also the decline in turnover. So they're the sort of things that you and or us need to be looking at on your behalf right now. The same with your employees. Who are your employees? Are they eligible? Are they over 16? Do they have the right visa? Are they residents? Again, this is one that we keep stressing it. And last week, I think people thought I was going over the top. But the critical thing is you must pay these people. You can't wait until May when the government cuts you a check. You must pay them during April. And next month, it's even sharper. You must pay them in the fortnight that they work. So don't overlook this. There's no way around it. You will get sprung. Your enrolment for JobKeeper as well. Really important. That was what started on Monday, but there's certain things we need to do. As Claude said, we go through and we nominate how many employees. We nominate the business participant. We obviously nominate the business. There's a few other things that we need to do, but you need to get it right, because if we get it wrong, you recall the numbers that we showed a second ago, very, very costly. You then need to apply for your JobKeeper payments, okay? So this happens next month. That's after the fact. So we can't sort of get to the 4th of May and be talking to you or anyone else, and then we say to them, did you make the payment? If the employer says no, there's nothing we can do. It's too late, unfortunately. And then following that, there's a monthly declaration report. So again, I've put all of these things in here just so that you can see the extents and the lengths that we have to go to get this right. So I'm don't want to kid anyone. This is a very straightforward process, how you qualify and how you become eligible. However, to get to the other end, there's a lot involved in it. So we just need to point that out. So apologies for that, but let me just very quickly jump back to my PowerPoint because I want to now introduce John Correia. So as I mentioned earlier, John's our finance specialist and does a lot of work with our business clients and personal clients in order to arrange finance, restructure financing, refinancing, obviously, but even just general discussions about have they got the appropriate facilities, what's right for their business, you know, what else should they be looking at, what's possible out there. So, and the reason I wanted to get John involved in this is one of the big issues from the government that they announced was, oh, the banks are going to work with you and they're going to help you get through these tough times. So, and I do know that the banks are genuinely wanting to help. Whether they're getting there or not, John's going to give us a bit of an update on that. But critically important, and why we wanted to tie this in with JobKeeper, is although I think he's doing a very good job at the moment, Mr. Morrison, as our Prime Minister, and he's shown good leadership, he actually came out when he was asked about how would businesses fund wages while they had to wait for JobKeeper to come through. It was almost a throwaway line. He said, "I just talk to your banks will fund you." Now, that's almost a sort of 30-day revolving line of credit that he's talking about. I'm unsure, or I'm yet to see any banks put those in place. So what I'd like to do now is hand over to John to get him to give us a bit of a background. He's going to talk, as you can see, he's talk a bit about personal borrowing as well as business borrowing and just a bit of an update. So John, are you able to unmute yourself and
I'm here, Kelvin. Can you hear me? Can you hear me?
Yes, I can hear you, John. Thank you.
All right. Thanks, Kelvin, for the intro. Hello, everybody. Look, I guess we could talk about finance all day if you really wanted me to, but we're just going to touch on a few key themes, given how relevant JobKeeper is and where the market is at the moment. Certainly for me, and I guess Kelvin and Claude, when we started our careers back in the recession, we had to have, I was a young graduate at Westpac, and you know, that was tough. You know, there wasn't a gazillion dollars being thrown at the economy and employer payments. So we had a lot of clients in bad bank, as we called it then, in the ICU of banking, and there was no government money sloshing around to help people out. So, you know, we had clients in my boss's office crying and asking for help. This is a bit different. So we've almost gone 180 in terms of the amount of assistance that the government is providing, which is fantastic. But, you know, there are still some challenges in accessing finance. So, I guess one of the key messages is that, you know, banks are being asked to see through, quote unquote, in terms of where businesses are and people are at the moment, in terms of where they were pre-COVID-19, where they are at the moment, and where they're possibly going post-COVID-19. Now, that's easy enough to say. I think for a lot of businesses and people, it's difficult for them to predict how that's going to look, let alone for a banker. So you need to have a good discussion with your bank, face-to-face if possible, to really enunciate all that. So if we go into the first slide, Kel, you can just go to the next one as well. So it goes without saying, there's a lot more focus on the impacts for personal borrowers, what it means in terms of salaries, commissions, bonuses, and now JobKeeper as well. From a broker's point of view, brokers obviously have, and the industry generally has some very large, what we call responsible lending obligations, to ask fully detailed questions about the client's financial position, including their living expenses. You would have seen a lot of that got airplay in the Royal Commission, thanks to Mr. Hayne. Those obligations don't go away simply because now we're in a COVID-19 crisis. So if anything, the focus is even greater. So this is just some example of the questions that are being asked by lenders that I'm getting through on the residential side, that people are now going to have to, well, brokers are going to have to ask their clients, and in turn provide that with the application that goes to any for any residential loan product. So no surprise there, really. Kelvin, the next one. So this was straight off some instructions I received from one of the big four banks recently, again tying into how people are addressing their personal financial situation at the moment. And you can see there, in terms of how the banks are looking at JobKeeper, if they're performing their usual duties and receiving their regular salary, this can be treated as normal income and can be included in the application. If you're receiving a higher salary, due to JobKeeper subsidy, which might be few and far between, you need, as a broker, to confirm their regular income prior to COVID-19. So again, this is the see-through historically and forward-looking in terms of where clients' financial position and earnings are and were, and do not include that income in the application. And you can see the last point there, if they're not performing any duties or minimal duties, that will not be used to support any new application, but only to variations in existing overall lending or no change to overall lending. So it is being treated not as baseline income unless your full salary is still being received and you're still performing your full duties.
So, sorry, John, can I just ask a question on that? So
Sure.
you mean someone that perhaps may have been stood down and only as a result of JobKeeper they've been taken back on, but they're only getting the minimum of $1,500 a fortnight?
Yeah, correct.
Okay, all right.
Correct. Yeah.
That's interesting. Okay, thanks for that.
Next one, Cal.
Sure.
I just want to give you an overview of rates. Clearly, we're in sort of the lowest rate environment we've seen for a generation, which is not necessarily a good thing because it suggests the economy is really weak as it is. So it is a bit of a double-edged sword. But if you are in a position to borrow money or you have debt at the moment, then you are fortunate in the sense that you are paying some of the lowest rates in a very long time, as opposed to the recession that we had to have. So you can see, I just want to give you some examples of some of the rates that are out there. So if you are looking at, say, a typical $500,000 owner-occupied home loan with a modest loan-to-value ratio of 70%, if you're looking at principal and interest, you're sub 3%. If you're paying more than that, you're paying too much. If you're looking at interest-only home loan, again, you're only paying, excuse me, sorry. You're only paying around the threes. Now, it's really interesting at the moment that I find is that the difference between interest only and P&I is very close. Banks were previously making a bit of a gap, especially post-Hayne, where, as you may recall, Hayne had a big issue with people paying interest-only loans and the impact potentially on borrowers not being able to pay that back. The rates on that have closed, and I think generally that's driven by the fact that market rates long-term, 1 year, 2 year, 3 year, the gap is closed as well because markets believe that interest rates will fall in the future. And on the next slide, there is an example of that as well in the fixed rates. So just give you an example there. So again, owner-occupied 2 years, P&I, looking at 2.34, that's lower than spot rates. So that gives you an idea of where markets are seeing interest rates in the future. So it's not a healthy predictor for where the economy might go because they're forecasting potentially lower rates. And even for the investor, 2 years interest only at 2.84 is just, cast your mind back 2-3 years. It's just incredible where rates are at the moment. So if you're in a position to borrow and take advantage of opportunities in the market, as there will be, there's certainly your cost of capital is incredibly low. And ironically, if you could pick up, so for example, an investment property that was yielding you gross 4-odd%, you could do that interest-only borrowing at 2.84 pre-costs.
John, just in relation to these sort of rates and these facilities that you're talking about aren't necessarily all tied to the current COVID-19 situation either, are they? So that's what you're saying. If you are in a position to be able to borrow, you could jump at this very quickly and set yourself up for the future.
Yeah, I had someone the other day just discussing a scenario with me, Kelvin, where they potentially wanted to borrow $1 million against the equity in their property. and looking at basically investing that into the market, building up a long-term portfolio of shares.
Okay.
So they're talking about $1 million, and we looked at potentially doing a cash-out facility with Citibank, and the rate on that was about 3.35%.
Wow. Okay.
Which again, exceptional. So if you're investing in some blue chip stocks that are yielding, and obviously the banks at the moment anywhere from 5 to 7%, BHP, whatever, fully franked or partly franked, and you're a sophisticated investor and you can manage the risk, that's obviously a pretty attractive scenario for you. But obviously, everyone is different. Everyone has very different personal circumstances. As you and I well know, Kelvin.
Yes, we do.
Yep, throw 10 borrowers in the room and they'll have a completely different spectrum of needs and circumstances. So I'll note that with a point of caution.
Okay.
Next one, thanks, Phil.
Sorry, John, just while you're
Yes.
at that, with the initial term for interest-only loans, are they still the same in number of years, or they shifted as well?
As in term, you mean?
As in, was it 3 years or 5 years, the initial interest-only term for a loan?
It was. Banks are doing up to 5 years.
Yep.
I think with some lenders you can still get that, and on some commercial property stuff with some of the second-tier lenders you can get those sorts of terms.
Okay.
Residential, banks not so keen.
Yep.
To go up to that period of time. And the other thing I'll just note as well on the residential side, something that came in probably 2 odd years ago now with responsible lending, is that banks are also looking at the age of borrowers, and particularly say if you've got interest only converting to P&I after your 5-year term is up. If you're in your, late 40s, early 50s, mid 50s, and you want to roll out again for interest only, good luck with that. But then you've got, say, a 25-year P&I period to follow or a 20-year P&I period to follow. Banks are also looking at, without being ageist, what's your rest of your working life? What does your financial position look like? Can you pay this out? Do you need to draw on your super, sell an asset, etc., to get rid of that liability so it's not hanging around your neck till you're about 75. Interestingly, something I noted the other day, apparently APRA has come out and said to the banks that they will be, I'm not sure relaxed is the right word, but they will be a little more considerate of clients, banks allowing clients to roll over their interest-only loans, whereas previously they come down pretty hard on that. It's almost impossible to roll over an interest-only loan on a residential piece, particularly depending on age or other circumstances. But I did see something the other day where APRA said, we will not come down super hard on you if it deals with a financial hardship provision.
Okay.
And you can justify that there's valid reason for extending an interest-only period.
Okay.
Okay, thanks, John.
Yep.
Yes, thanks, John. And look, I suppose this is a part that a lot of
couple more.
people are interested in is the current situation. What's happening? Are the banks actually approving finance, those sorts of things? So I know I'm getting a lot of questions about it.
Sure. Okay, so Kelvin and Claude have covered a lot of this stuff in previous presentations, so I won't necessarily dwell on each point, but there were a number of key measures, as we know. Deferral of repayments for up to 6 months across term loans and equipment finance, temporary overdrafts, and now the government-backed lending of $250,000. When some of those measures first came out, and I spoke to some of the senior business development managers that I deal with across some of the banks, they were getting flogged with inquiries, both from brokers and clients, absolutely flogged. And a lot of that was around deferred repayments. And in some cases, that was even if you can get hold of your banking manager. They were just getting inundated. And I think they're only just sort of getting through the backlog now, is my understanding. So if you're on the front foot, you're probably first in the door. I've got a client who's got about $5 million in facilities with Bankwest spread across bank guarantees, overdrafts, some personal funding. They're in a commercial office fit-out business. She was on the front foot about a week before things really sort of hit the fan, rearranging some of her facilities with her lender before things went a bit crazy. So being proactive is key, very key, as Kelvin has also said previously. It's really important to have all your financial information up to date. I can't stress that enough. In the same way that Kelvin and his guys are helping you out, getting your financials up to date. Really important that you have as much financial information up to date, including your tax position, as possible, to assist with any assessment. Because it's always been difficult for a lender to lend you money for business purposes if you have outstanding tax liabilities or repayment plan. Now, often they're quite valid reasons for having that, but you do need to be able to address those issues. Okay, we can move on, Kelvin, I think.
Sure.
So in terms of other funding options, and I just wanted to give you some thoughts in terms of things to think about, depending on your business. And as again, I'll say every business is very different. So for example, do you have a solid debtor book where you could potentially look at doing some debtor financing or some invoice financing? There are some lenders very active in that space, a couple of the majors, NAB, Westpac, and also Scottish Pacific as an example, and some other ones. Can you selectively finance an invoice or sell your debtor book up to 80% of that value to somebody like a Scottish Pacific to free up some cash flow? That's a valid consideration. If you've paid for some new equipment for cash, usually in the last 6 months, you might consider doing a sale and leaseback to one of the asset financiers out there. That's also something that people are considering. I'm just hopefully closing a deal at the moment for some mining gear, actually, for several $1 million on a sale and leaseback for equipment that's actually been rebuilt and is actually a number of years old, but has just been rebuilt. So that'd be a nice little transaction. There are lenders who will lend against a portfolio of equipment, mostly movable goods like yellow goods, trucks, etc. They're not your major banks, but there are some private funds that will lend against that. Trade finance, again, have you looked at how you can finance your import and export finance rather than just paying cash? Can you finance that to manage your payment cycle? A couple of the major banks are pretty good at that. Insurance premium funding, you know, if you're paying 200, 300 grand a year, once a year in insurance premiums, maybe you could look to finance that, spread it out. And the fintech lenders, we'll get onto a couple of those just on the next slide. So we might just move on, Kel. Okay, so just to give you a bit of feedback in terms of what some lenders are offering and what they're doing. Like everyone else here, I'm getting webinars every day from different lenders. I'm a member of the AFG broker panel, and they have about 30 odd lenders, including their business finance platform, that are constantly updating us with what they're doing. So just to give you an idea, Macquarie Asset Finance, they had a webinar yesterday, so it goes without saying they're looking at things a lot more closely. They've suspended what they call their streamlined application process. You must have your 2019 accounts and your last 3 BAS statements as a minimum before they'll assess an application from you. SpotCap, still very aggressive in the market, still doing 500,000 unsecured. They are doing a lot more due diligence. It is taking a little bit longer. And you can see there's some of the industries that they're not lending to at the moment, which I've highlighted. Probably no real surprises there. Banjo loans, they're a fairly new player in the market. Unsecured business loans, again, 500 grand. They've got this new offering called Flexi Working Capital Loan, up to 16 months. You can do 4 months interest only, your choice, and then switch to P&I. I would note, of course, that some of these loans are getting up in the low to high teens interest rate. So it's not going to be for everybody. But if you are in a position where you do need some quick unsecured funding, it might be a consideration for you potentially. Wiser personal loans, again, a fairly new player in the market, up to 50 grand, any worthwhile purpose and completely unsecured. I'm looking at them at the moment for someone who wants to buy a boat and wants to borrow 50 grand. The age of the vessel is irrelevant to them. They don't want any other security. They won't even take security over the vessel itself. It's just against them as a personal borrower. Quite unbelievable, but that's what they're offering. Okay. So in other words, heaps of choices. Every business is different. There are hundreds of options out there depending on the circumstances. If you do need some funding, whether it's your existing funding you want to look at or new funding, best to have a chat and discuss your circumstances and assess the options from there.
Thanks, John. Appreciate that. And yeah, as John said, he's happy to have a chat, as are we. If you're unsure about what you should be doing at the moment, please speak to Claude or myself. And I think John's details were right up front. So if you want to go direct to him, I'm sure he's happy to have a chat and see what you're looking for. But appreciate that, John. We're getting a lot of questions about financing, so I thought, why not get an expert on here rather than just have Claude and I talking about what we're seeing through our business contacts and banking relationships. So thank you very much for your time. Really appreciate that.
All right.
I know you're as busy as we are at the moment. Look, I am going to push on a bit. We're a little bit behind time, so I'm just going to jump very quickly into the frequently asked questions that have come through. So again, thanks, John. And if we jump into these now, these are the questions that were asked pre this session. So hopefully we may have answered some of these already. So I'll run through them reasonably quickly, and then we'll try and take a couple more questions if we have any. So the first question that we had asked of us was, what is the nomination process for a director of a business or a sole proprietor? The employee nomination notice is not applicable per the ATO. So what form is used? Currently, I'll put the answer up here as well. The process to nominate an EBP is the same as if you're nominating employees at the moment. It's in the sense of how many employees do you have and how many, or do you have an eligible business participant, because you can only have the one. You're still required to register via the business portal to confirm your eligibility, and that's when the process will kick off. There is a different form that needs to be completed for an EBP, and it must be maintained on file. But at the moment, it's just more a matter of getting into the system and saying, yes, we have one. Okay, it's a little bit different because you're not a third party, you're part of the business. Okay, so hopefully that has answered that question. I can't actually recall who asked that one. A business trading for less than 12 months, what is the best way to measure average turnover pre-March 2020? That has slightly changed with the alternative tests coming out. If a business has been trading for less than 12 months, the Commissioner has discretion to provide an alternative test. So now they have the discretion in two senses. One is they have the discretion under the alternative test that we talked about a little bit earlier, but at the same time, with this entire process, you can make application and ask the tax office to exercise their discretion. Okay, so if your circumstances in your mind and based on your records justify a decline, it's worth putting up an argument and asking the Commissioner to confirm that. In fact, if you do that, that sort of nails it for you and says, yes, the tax office have already granted me this, so let's go down that path. Well, you can always do that with the tax office, but this is one circumstance you can actually say, these are my circumstances, am I right to claim? And they hopefully give you the big tick. Do staff need to make up hours despite being on unpaid leave? This is a tricky one. If a business qualifies from a turnover perspective and you want to claim JobKeeper, you must pay each eligible employee the minimum of $1,500. It is up to each employer if they, and I put the inverted commas on there, request employees who earn less than $1,500 to work additional hours. However, you do need to exercise some caution here under the Fair Work Act to make sure that however you deal with these employees, you're doing it in the right manner so as not to breach anything within the Act. Okay, so again, we're working with some employees that, employers or businesses that employ a large number of casuals. So we're actually working at almost an advisory level to just talk to them about how to deal with the employees. What is the best way to approach them? How do you get the most out of them? Because I had someone on the phone an hour and a half ago who said, well, there's certain casuals that earn less than that week in, week out. They could sit at home and get paid, yet I've got other employees saying, well, why should I work hard if these people are not working hard? So it becomes a bit of a people management process as well. And there was a case that was in the media only a couple of days ago about this as well, which got a little bit nasty. So I'd say exercise caution, but I would hope in the prospect of maintaining good employee relationships and employer relationships, everyone will do this in good faith. My business is likely not going to be eligible for JobKeeper until past June or July. I have registered. Do I need to do anything now or just wait until my revenue drops? That was a great question because we're getting a bit of this. The answer in a couple of words is you will not qualify until you meet the reduction in turnover. However, you are registered, but it will only become available to you, and your enrolment period will be critical when you are, when you do have that decline in June or July. Okay, so month on month, I would be recommending that it be assessed internally, and then you go through the process, and it'll be, okay, well, for the month of June, I've suffered a decline. This is a month I'm eligible for. This is the number of employees. Let's start the process. I've registered for JobKeeper. What's next? The registration process was nothing more than getting yourself on a mailing list. It was effectively a way of saying, okay, we've got your details. We'll let you know when you can enrol. The important part is, and I believe Claude answered this one, this is a self-assessment process. So nothing will happen unless you actually enrol. And in order to enrol, you need to make sure you are eligible. So just because a couple of weeks ago you went onto the website, which we were referring you to, where you went on there to get updates on JobKeeper, you do formally need to enrol, and then you need to apply. And then you need to nominate employees and a number of other steps as well, as I mentioned earlier. So keep that in mind. Just because you registered a couple of weeks ago doesn't mean that you are done and dusted. That's the least of what you've got to do. You've got to do a lot more than that. Do JobKeeper payments continue if your sales recover in a couple of months? They sure do. If you qualify now and you meet that test, they continue. So, as I said, it is hoped by everyone that we get past this very, very quickly. And it's my view, personally, that we are moving forward. We're seeing some positives. I'm not quite willing to open the floodgates just yet, but I am hoping that we are all going to come back, bigger and better and stronger and faster. And we've learned a bit from this. So if all goes well, you've had a decline in March, you may have had a decline in April and even May, which we're almost into. But let's hope that by June, July, August, September, things are on the up. Everything's improving. The government will continue to fund you as long as you continue to meet the eligibility criteria. Okay. That's the end of the FAQs. I'm going to actually see if there's any further questions before wrapping up. So feel free to jump onto the chat box and raise any questions that you may have. I'm just very quickly going to run through. This is what we've been talking about for the last few weeks, about taking good advice. We're seeing a lot of bad advice. My sister-in-law told me this. A guy I used to go to the gym with told me that. My neighbour told me this. Take professional advice. Take good advice. Don't just listen to the man on the street. Please talk to the appropriate professionals. Importantly as well, lodge your Q3 BAS. We talked about it a few weeks ago in detail, but that's where you will also get some of the cash flow incentives coming through. So please do that. Please look at cash flow planning. Look at year-end planning as well. FBT returns, we're talking to our clients about FBT returns now to get those right. That's another nasty of the ATOs. And tax planning. And again, I said tax planning, we refer to it also as year-end planning. Get an idea now of what your full year looks like so that you can start to plan tax payments, whether you need to go to your bank, whether you need to give John a call and access some funding. It comes back to cash flow. You need to start talking about these sorts of things. Again, I'm not going to harp on about business continuity planning. We've talked at length about these 7 issues that we think are critical to all businesses every day of the week, but particularly at the moment that you need to be considering. I am seeing a few questions come up, so I will very quickly have a look at who we've got. I've got a question here from Ray. Thanks, Ray. Can I enrol, etc., via my accounting software, e.g. Xero? Ray, no, you can't. And Claude can confirm this for me. Your enrolment takes place either via the business portal or, for us tax agents, via our tax agent portal on your behalf. So Xero will assist with certain aspects of the process, as in, qualifying you in certain areas, looking at which employees you've got. However, the enrolment process must be via the ATO directly. Claude, is that correct? That hasn't changed in the last day or so?
No, that's spot on, Kelvin.
Right.
So Xero's got some great functionality there, and allows you to check your eligibility. But then I believe it just directs you to the ATO, either website or via your portal, to actually go through the actual application process.
Okay. Thanks, Claude. And sorry, Ray, I'm going to jump to the next question. We're getting a lot come through. So I appreciate everyone staying online as well. We have gone over time, so thank you. Kirsten has asked a question. The employer wants staff who were basically stood down on unpaid leave from the 30th of the 3rd to the 14th of the 4th to now make up the hours to get the 1,500 JobKeeper payment. Is this correct? And she's got to make up the hours in that time frame. 30. Look, you can't change history. As I said earlier, this is a tough one because it comes under Fair Work and employment contractual law and those sorts of things. So I think anyone needs to exercise caution here to see whether that is appropriate. And we are hearing these circumstances. Now, we're not lawyers either, so if you do have a specific requirement in that regard, we can definitely refer you to some of the best lawyers in Perth in relation to HR issues. So look, in my mind, it doesn't seem morally right, I'll say, from a business perspective as well. If you're doing the right thing by the employees, you're trying to get the maximum benefit out of those employees, for the sole reason, though, that the government's going to pay you and then you pay the employee. The reality is the government have also said that they are working with Fair Work Australia or the Fair Work Office to keep a very, very close eye on this. So if any employees are unfairly treated, the government have already made noises they'll come down hard. So unfortunately, Kirsten, I can't answer that 100% for you. Happy to sort of, if you want to tell us a bit more about the background on it offline, I'll see if I can get an answer for you though. So thank you for the question though. Peter has asked me a question. We are closely held employees and do not submit STP reports. Will this be assessed at our next quarterly BAS? How will we report to the ATO? Again, this is a bit of a technical one within Xero, within STP, and I look for Claude's expertise on this. He's way better on Xero than I am, but I believe that you would follow the exact same process, Peter. If you are an employee and you were employed at that period of time and you're still getting paid during the month of April, you will qualify. Claude, just because you're closely held only impacts the reporting of it for STP, not for JobKeeper, correct?
Yeah, correct. Yeah. So as long as payments are, again, it's the critical condition is payments need to be made, and even if you've missed a payment in say April, or you haven't paid the minimum 1,500 in the first fortnight of April, the commissioner has given discretion, or an allowance, I should say, for this first month in operation to make up that payment, either by amending that pay run or doing I suppose like an unscheduled additional pay run prior to the second fortnight. So yeah, absolutely. As long as payment's made, then you should qualify, absolutely.
Okay. Thanks, Claude, and thanks, Peter. Hopefully that answers you. Andrea has asked, if the business has not suffered a downturn but could in June or later, should we enrol only then or now? Andrea, I'm guessing that was your question that we answered earlier in the FAQs. I'm hoping that it was, and we've now covered that. So if it's not, as I said, you're entitled to claim it for a later period. If you don't have any reduction in or decline in revenue up to the 30% threshold, then sadly you can't access it. However, I'd be assessing it on an ongoing basis, and that's not just after the end of the month. I'd be doing it during the month and comparing with the previous year to see how you look, and the previous quarter the previous year. Sorry, the relevant quarter the previous year. So just keep right across your numbers, guys. I can't sell Xero hard enough on this, and I don't get anything for selling Xero, but that's critical to it. So thanks for that, Andrea. Lance has asked, Lance hasn't asked a question. He's actually listed all of the JobKeeper hotlines for banks. So thanks very much for that, Lance. I appreciate it. there's a number of phone numbers there for, it looks like NAB got in early with their 1-800 number, so good on them. Thanks, Lance, appreciate that. Brendan, as a sole trader, no employees and a beneficiary of the trust and eligible for JobKeeper. Yes, you are. I can confirm that, Brendan, knowing your business quite well, and I know Claude's across it as well. Cash boost component, however, is reliant upon you having withholding tax instalments deducted for employees. So that's something that I'd suggest you have a chat to offline with Claude, because that will be determined by which employees you had in the March quarter, who you still have as an employee, what income, what PAYG instalments you're deducting on their behalf, withholding, PAYG withholding you are taking out and paying to the tax man. Okay. I've just had Rob put on here. John, I took the opportunity to stress test the level of support from NAB in the context of existing fully secured facilities and the fact that the secured interest rates are in fact higher than the unsecured 250k. They advised they could not assist. So, and I have seen this as well. So, John, are you still on the line?
I'm here, mate.
Okay, so yeah, so Rob has said that they advised they could not assist, as in there's an existing facility with a rate up here, whereas the current offerings are, at floor level, 2 and 3%, but they won't budge on the existing facility. So have you got a quick 30-second thought on that?
Yeah, look, and I guess what it comes down to at the end of the day, Kel, like I said before, is the particular circumstance of that borrowing. And so you need to look at all the facets. And one thing that's got to be borne in mind is that each business loan has a risk grade attached to it, and a number of factors that go into that, including management, trading history, key ratios, etc., which can affect that, property, loan to value ratio, interest cover ratio, etc. So a little bit hard to comment, although the government supported packages are effectively a discrete funding pool the government has made available, and is managing the interest rate on that through the money market as well, which allowed the banks to reduce that cost of funding. So that's a very quick 30-second, but happy to have a look, Rob.
Okay. All right. Look, we can have a chat offline about that as well, if need be. So hopefully, Rob, that answers your question. Andrea has said, in relation to her question earlier, what month should I put on the enrolment for the downturn? You would, and currently, and I'm talking about the enrolments that I've made, it refers to, is it for March, is it for April, is it those sorts of things. So I haven't actually pushed out any further, and I'm not sure whether we can actually enrol based on, for example, June, Claude. You haven't said anything like that, have you? Because it's basically in relation to the June quarter.
Yeah,
to nominate for. So, Andrea, look, if you, and as I've said previously, we work through a process with our clients to assess their eligibility. If you're going along quite well at the moment and everything's good, then that's fine. And you've just gone through the process by the look of it, so you say the other months are on there. If you know, or you're forecasting that you will have a decline in the month of June, then that's what you put. Okay. Because importantly, the enrolment is the first part of it, but it's not until you actually go through and do your monthly report that you will prove your eligibility for the employees. Okay, so if you can jump in now, and look, Andrea, how about, if you like, you're sort of firing a number of questions at us now. I'm happy to have a chat to you afterwards, because I'm unsure which period you're talking about now. So is that all right? We may have a chat even at the end of this call. Just conscious of everyone's time. Otherwise, feel free to drop me an email, and Claude and I will come back to you. So not trying to put you off, just trying to keep everyone on the line, just answering a few questions. We are actually, Serena, do we have any more questions that I've missed? I'm hoping I haven't missed any, guys. So apologies if I have, but as I said, I'm happy to come back and have a chat. But look, I am really conscious of time. We have actually gone over 15 minutes. So thanks to everyone for hanging on the line. I do appreciate it. Look, we are working on this every day. And when I say every day, it is 7 days a week, just about. So both Claude and I are doing our very best to get across everything that's changing, everything that's applicable to our clients. And we're trying to get this information out in a leveraged way, as in these sort of webinars. So it's great that everyone's jumped on board today. Please let us know what you think. I would appreciate a personal email from a few people as well, if you like to let us know. Ray, looks like you've enjoyed it. So thanks very much for letting us know. I would also suggest that you let us know what you did like, what you didn't like, what more you'd like to know as well. Okay, so hopefully we're providing you with informative information that you can utilise in your business to keep you running along, get you back on your feet and make the most out of what we're currently looking at, which is JobKeeper. So please look after yourselves, look after your family and your business. To John and Claude, thanks very much. I really appreciate the support today. And it also breaks it up so that it's not just my voice droning on for an hour and 15. But thank you very much to everyone. Please stay in touch. Keep an eye out for our emails. If you're not already on our email list, jump on our website at herebusiness.com.au and subscribe to our emails. Serena's a gun. She gets out most of the or all of the information that I ask her to, that's for sure. Because we're finding there's so much coming out. So it's the only way we can keep you up to date. And please stay in touch, stay safe, look after yourselves, and I look forward to seeing you all soon. Thank you, everyone, and enjoy your weekend as well.
Thank you.
Thanks, John, Claude.
See you guys.